Welcome everyone. How we doing? Welcome everybody. We'll give it a few more minutes. How'd everybody do today? It's happening. Got Norberto in the house. Welcome Norvin. Been hitting some bangers, huh? All right, on Husky. Happens to the best of us. Good day for me. Nothing too crazy. We hit a couple nice ones on IWM early. Paper handed those, and kind of sat out most of the middle of the day. But then hit some nice scalps into the end of the day in the pro voice chat. It was fun. Nothing overly exciting. I know I took some spy puts in there and we hit nice on those. They did like 100%, but one buddy he jumped into those like he really sniped the top on him and he ended up doing like 350%. I sold my biggest for 70 or 80%, something like that. But good day. Nothing overly exciting. Could have been a great day to capitalize on things, but I just, like I said, I kind of traded early, and then caught a little bit of the bounce, I think, but then I really wasn't trading until up around here. Yeah, Norbin, we'll get there in a little bit. Q&A tonight, so we're doing a little bit of everything. Uh, Uh, we'll get into it more as we start going, but going to talk about, I got a couple things that I just want to talk about first. Just some things that I've seen in the Discord. It's, things that I know a lot of people struggle with, and just some ideas and things that, it's kind of trading psych stuff, but some stuff that hopefully people could work on a little bit. I just want to touch a little bit talking about stop losses and talking about entries today. Obviously, it's not going to be a whole class on anything like that, but they're the things that I get the questions about the most. And I'm sure everybody can always get better at where they enter and where they stop out. We obviously aren't looking to bottom tick or top, bottom tick every call or top tick every short, nothing like that. But just some things that we can look for. And, we're just going to do it by looking at the chart. Obviously, it's hindsight trading stuff. So you get to pretend like you're better, like you're just the best. You always get to when you're hindsight trading. But we're just going to talk about some examples of, why, places that you can maybe look for entries and places that you should likely stop out of trades, if you are ending up being wrong. But then after that Q&A, we can look in charts, we can look at whatever you guys want to look at. So we'll give it a couple more minutes and then we'll get into it. Norbin, VST, FTI, yeah, you've been on those. That one, This one, it's a big holding in IWM, and God, with the run that it's been on, it moved itself from much lower on the largest holdings to much higher on the largest holdings of IWM. IWM is a tricky one, it's not like SPY and QQQ where you can really watch those big names and know what they're going to do. IWM holds a lot, it holds 2,000 different things. And so most of them are very small holdings, under 1%. I think almost all of them, maybe all of them are under 1%. But this one has worked its way to top 5 list. Okay, give me 1 second. What do I think is going to happen tomorrow? It's hard to say. I'm hoping for, and I could very well be wrong. But I'm hoping for some amount of gap down, not like huge. I'm not bearish or anything, but I'd love to see us kind of come down and retest this 590. That's a pretty big level for us, and I'd love to dip down to 590 to, hopefully look into a nice little dip buy into, close out the week. But who knows? We'll see. Next week we got, we have Thanksgiving, so short week. So not the best idea to be entering swings or anything like that, but hopefully we'll get a nice little move for us tomorrow. Oh, we got the outer circle trader, and we got Crash in here. Oh, we got Call in here. We got Nando in here. We got all kinds of people in here. Wow. Give me just 1 second. Gabriel, how are you doing? There's Norvin, Kalal, welcome. Okay, welcome everybody. So happy to have you here. We got a nice little crowd in here, and tonight is Q&A. These are definitely probably my favorite kind of lecture to do. I love teaching. I love talking technicals. I love talking charts. Trading's an awesome thing, awesome opportunity for all of us, and I like these Q&As because people get to ask the questions that they want to talk about. Oh, Lamba is happy to have you. Oh, we got colleges causing issues. That guy's a wild card, huh? So we got these Q&As, and I like them because, I'm lucky enough I get to do, at least one class a week every single week, but I teach about what I want to teach about or what I think I should teach about. And I like the Q&As because we get to talk about what you all want to talk about. And so again, I want to have this, super open forum tonight. Talk about, whatever you guys want to talk about. If you want to get on the mic, everybody's more than welcome to unmute their mic, or even if you just want to, you know, send it to the chat, no problem. Obviously, we probably can't call. Obviously, we probably can't unmute the mic for Norvin. You guys know how that guy gets. But beyond that, I want to talk about whatever you guys want to talk about. Oh yeah, Lambas, you want to hop on the mic? Okay, so first things first, what I was saying, before we start anything, or before we start the full-on Q&A, for just, 5 minutes, I want to talk about entries and exits, and we're going to use my chart, so obviously it's my levels. I understand other people's levels would probably be different. I of course think if your levels are too wildly different than mine, or yours just aren't kind of working like they're supposed to, and we charted all of these in a class here, well, in our support and resistance class last week. I'm going to tell you how I would trade around my levels and some trades that I might look to take, and trades that I might take and end up being wrong on. And so that's a big part of trading, and is going to kind of be the second part of talking about entries and exits for this beginning part, is stop outs. They're a thing that's very, very hard for people. People tend to not follow them, unfortunately, and it really hurts your portfolio in the long run. And so I want to talk about stopping out. I want to talk about being wrong. I should honestly almost use IWM today because I took a trade on it that I was wrong on. That was just part of it. But we're going to talk about maybe some entries. And if we take these entries, where should we stop out? Where do we admit that we are wrong? And so I do have one trade on SPY that I took this morning that I stopped out of, that ultimately would have ended up paying. But because of how I trade, it wasn't something that I would hold on to. And obviously, again, this is always hindsight trading, but I do want to use one of the examples of a trade that I stopped out on. So, and I'll get rid of the opening range. We don't need to see that. But these are my levels. I'll even get rid of the ribbon in the middle. We don't need that. That's just kind of, probably distracts us a little bit. These are my levels. I have the basic EMAs everybody else does. And so I trade support and resistance. I trade trends. I trade, obviously volume. A lot of stuff goes into my trade, but the bread and butter of every single thing is support and resistance. So, Flips talks about it all the time. Every analyst talks about it. Anybody who trades and makes money is using support and resistance, whether they want to say they are or not. We all have a level. We all have a place that we want to enter at. We all have a place that we want something to go to. And so how can we manage these trades? How can we look to enter trades? Where can we look to stop out of trades? And so one of the trades that I took today was, we had sold down and I was feeling slightly bearish, obviously. But didn't take a bunch of trades early in the morning. We were rejecting EMAs, but I had watched this bounce happen. I had then watched this bounce happen. So I wanted to look for a scalp right here. And so, I was looking for basically like a triple bottom or whatever it might have been. And why do I want to look for a scalp here? Because in my mind, this 589.20 to 590 range is big. And you catch an 80-cent bounce on SPY in a candle or two, your contracts are going to pay you very well. Well, I took the entry here. I got a little bit of a bounce, as I recall, but not much of a bounce, not enough that I took a trim on the contracts or anything. And then I knew that my stop is below these wicks down here. If I'm seeing heavy selling pressure down to these wicks, that's where my stop is. So I knew that I was looking at, basically like a 60-cent stop out, looking for an 80-cent bounce. Not awesome risk reward, but looking for a quick scalp. That's all we were looking for. You can see I got stopped out on the very next candle and I took that stop out and I lost money, but I don't let it bug me. And then, of course, you sit there and you watch, and 20 minutes later, all of a sudden, we're turning into a nice big bounce, nice big bounce, bullish candles, blah blah blah. We can start to change our, bearish opinion here. But I tried to catch a bounce, and I was wrong, so I stopped out and I took the loss, and then it bounced. And obviously, I would have gone green. I would have made, a lot of money if I took this trade and held on to this trade. However, my plan before I entered this trade was I was stopping under these wicks. So that's what I do. And that's where I think a lot of people struggle is they won't follow that rule. They won't stop out. So when you don't stop out, sure, sometimes it's going to bounce for you. And we hear people say it all the time, oh, I was down 50% and well, it came back green. That's not good trading. That's not effective trading. That's not how you want to trade. I'm happy you made money. That's what I always tell people, if you're minus 30, 40, 50, 60%, whatever it is, and the trade bounces back and you make money, I'm super happy that you made money, but also it's a losing strategy. You can't last long in the market just holding forever. You will end up having to deposit all the time because you lose everything. If this bounce hadn't come, if I had held, I took the stop out for, I think it was 18%. These things were down 30% by the time it had dropped $1.50 against me or whatever it was. So 30, 40% down here. I don't want to incur that type of a loss. So what do I do as a trader? I admit I'm wrong. I stop out and I move on. And then I look for a new entry. And so that was basically what we had today here. We broke down, we pushed back up, and then we've now on the chart, we have now broken trend. We have now broken above EMAs. We've broken back through what we considered an important enough zone previously that we were trying to long it. So now we buy the pullback on the breakout. And again, this is a very similar trade as before. We are entering 590. Our stop, 589.20. You can even tighten it up and say right under the trend, whatever you want. This is our stop because, technically speaking, at this point, the market is still in a downtrend. It's only setting lower highs. So intraday, we're in a downtrend. Of course, we're in a wildly strong bull market. So I feel much, much, much safer buying dips than shorting rips, of course. And, don't get me wrong, I short things on occasion, for scalps intraday, but you stay bullish, So We take the breakout, we take the entry, we know where our stop is, and we know where our target is. Well, this brings us to our next point. This is a nice trade, good for us, we make money. Well, newer traders and people, they have this, they can't resist chasing. They see big green candles and they just want to start buying calls. And, at this point, they're probably still bearish. Then as you get to this candle, they're starting to think, oh wow, I maybe I should start thinking about some calls. Then we see it rip a little bit more. Well, by the time they're finally entering calls, you see this really prime example of, you can get away with buying the top of a green candle. On occasion, it will work for you. You can get away with shorting the bottom of a red candle. On occasion, it will work for you. Well, eventually it doesn't work and you get blown out in spectacular fashion. Or the other side, and again, these are my levels, so maybe other people don't have these levels or they were watching different levels. Well, we pushed up to here, and now everybody wants to be long. Once a move like this happens, that will flip most people's biases because, they've seen big green candles. So it affects the bias. This is, and you'll hear me and Flip say it all the time. There's not a worse entry than something like right here, or right here, or right here, or right here. Any of these highs are a very, very bad entry. You'll hear me talk about it all the time. Wait for pullbacks. You'll hear Flips talk about it. Wait for pullbacks. He says, let a flag form. I don't trade flags. I just view it as consolidation. That's all I think of a flag as. But wait for consolidation into something to enter this trade. So we can see these candles, they're holding these highs, no problems, there's no they're holding these candles. But we know that's where our stop out will be. So we let the consolidation form and we buy pullbacks. You buy calls on pullback candles. You buy puts on bounce candles. If you want to short something, let it bounce first. Don't short the bottom of the red candle, short the bounce back up. A statistic I talk about all the time is 80% of breakouts fail. So I'm not opposed to I'm not opposed to buying things looking for the breakout, because you can expect, you can, or you can't expect, but you can say, hey, the market is telling me that this breakout is likely coming. Well, if you buy calls here, you get beat up and you get beat up and you get beat up, and then finally maybe you get the move up. Well, the people who buy calls here, they make money, they make money, they make money. And by the time it gets to what your break even is, if you're buying to try to buy these tops of these moves for the breakout, if by the time you get back to break even, these people can already be trimming. And we know, again, this is a great trade and just the perfect example of why we don't buy at the tops of candles. Another one just off the top of my head, this was a trade that I took the other day, back here a couple days ago. So Apple, 230, huge level, big psychological number. People were trying to get long here. They were, they were not stopping. They were looking for the breakout. They were buying every single push up, and they did. They ultimately made a little bit of money. Well, me personally, I'm not going to buy before this breakout comes, I want a strong close over 230. We had a candle push up and close over 230, but that was it. And I would want to see confirmation above that. So what I did was I actually waited for this bounce up and I took the short on it. And the reason that I took the short here is because you enter here, your stop is here. So it's very, very obvious where the better risk reward on a trade like this is. You short this consolidation in these highs, and you know that your stop is only 25 cents above you. Like, that's a nice tight stop on an Apple contract. It's not going to hurt you at all. This is going to be a very, very great tight stop. Well, if you buy calls here looking for the breakout, your stop's got to be down here, or it's at least got to be down here. So if you're buying calls up here looking for the breakout, you've got over, you've got, I don't know, a buck of risk on the trade. if you buy puts up here, you got 25 cents of risk on the trade. So that's what when you hear me or other people say the risk reward isn't there. This is a really prime example of what we're talking about. And as we know, 230, big, huge number on Apple, also a psychological number, as all round numbers are. And so nice little short opportunity here. We were actually presented one the very next day, and this was one that we ended up taking in the Pro VC this morning. We shorted the highs on these green candles. It was also blown out like the fourth B band, so we could expect a little bit of a pullback, but we shorted up here because again, we knew the risk is 20 or 30 cents above us. So, it ultimately played out really well. And don't you worry. I mean, I was fully out of the trade here. I paper handed that one. I didn't catch like this or nothing. Some other people did, but I did not. But always look for that good risk reward, tight stop loss, buy calls on pullbacks, puts on bounces. And when you do that, you dramatically reduce your risk. And as traders, that's what we want to do. We want to have as little risk in the trade as is possible. And by waiting for those pullbacks, that's how we can start to, make a bit more money. I mean, even just to go back to these apples, if you buy this breakout retest, I am for sure not criticizing you. If you buy this pullback, I'm for sure not criticizing you. Calls here and your stop's 20 cents below you. No big deal. Even this one, calls here, your stop's again about 20, 25 cents below you. No big deal. Up here, when you triple your risk, that's where they are bad. And so, and again, you can make money doing this, but you make less money with more risk. So that's why, that was what I wanted to cover today, was just talking a little about entries, exits, stop outs, not getting super technical on it, nothing like that. And just explaining the logic that a lot of us, people who trade every day, whether you're hearing me, Flips, Nando, whoever's doing voice chat, we try to wait for pullbacks because you don't want to be the person chasing the breakout. We even had it on SPY today. Everybody wanted the 595 breakout. I mean, I thought it was going to come myself too. Thankfully, we shorted it when we saw it wasn't coming. But there's a lot of people buying calls here and here and here and here saying that 595 break is going to come. They ultimately ended up losing money because the move didn't come soon. Well, if you're on same days, next days you could have made a couple bucks. Well, the people who were buying these dips, they were actually making a couple of bucks on those scalps as you get later in the day, on that push up to 595. Again, I thought the breakout was going to come. I was incorrect as well, which is fine. It's perfectly fine to be wrong, but buy these pullbacks. And just again, to, really beat it into your brain. You buy this pullback, and granted, if you're on a same day, stops are tricky because they can be pretty big, if you're buying on these pullbacks, then your stop's down here 30, 40 cents below you. That's going to smoke a same day. Don't get me wrong. If you buy them up here, now all of a sudden you're a buck below you, give or take. And that contract's at zero if you're this late in the day and you let it go a dollar against you, so try to buy them here, buy your calls on these dip candles, buy your puts on these bounce candles, people shorting up here were making money, people buying calls down here were making money. And that's always what you have to do. You have to look at the chart and say, all of these wicks, okay, we got wicks down here, maybe I'll buy some calls. If they've wicked it a bunch of times, maybe I buy calls. We did actually catch this one off the opening range top, but buy those dips, short those rips. That is the safest way to trade. And it increases your profits a little bit. So again, that's it. Let's see. Oh wow, we got all kinds of messages over here. Nice, Adrian, you hit that one. I think this was the one you were talking about. I think I saw you mention that, or maybe you said that in voice chat. I don't remember. Yeah, Norvin, you're exactly right. There is no such thing as a perfect entry. A really great trader, Paul Tudor Jones, one of the greatest of all time. He said, in your life, you will only bottom or top tick once because you'll always get a better entry at some point, and you will always get closer to the absolute bottom and top tick. But you will really only do it once in your career. Oh, outer circle traders. So, yeah, nice eye there. This was a short we took. If this is the 3 push wedge you're talking about, I know it kind of ended up to be 4, but this is a trade that we took as well today. This was a nice little one. And then there was also this one down here, which, we'll just talk about these Q&A because I talked about them. This one down here, I actually like a lot as well, because something that I like to teach people is A lot of the time on these wedges, you'll get blown out. And right here, the buyer volume zeroes out. And again, just again, this is where I stopped out of a trade was somewhere right around here on this lower wedge. But we were seeing enough selling that I didn't take it. This, in that hindsight looking back, beautiful trade for sure. So both the upside three push wedge as well as this lower one worked real nice today. Yeah. Well, what do you mean? What happened to Snow? It had earnings. That's, I mean, yeah. So it broke out. Oh, whatever, Norvin, dude. Zave's been in snow shares forever. I mean, he's been in snow shares forever. AJ in the house, happy to have you. When I say pullback, it's always going to be 5 minute, 15 minute. I'm a person that you will never, ever, ever see me use the 1 minute. It is way too full of noise. It is way too full of bad information. I don't use the 1 minute. I actually do nearly all of my all of my main charting. I do on the daily time frame. I do so on the weekly time frame. I do it on those like these levels, all daily levels. None of this is, hour. Like I want my levels to work over and over again. And you find those kinds of levels on the daily. So I chart everything I do on the daily, I mean 90%. Then intraday, I take note of trends. I trade price action heavily. That's obviously what I do, is I'm a price action trader. But I do the intraday stuff. I do some trends, and that's really all I'm going to draw intraday. I will, however, have some, I mean, I don't know how to describe it, mental levels in my head. Like if I'm buying these dips, I'm exiting up here because we've rejected up here. I'm not going to put 594.60 on the chart. I don't care about that as a level in the long run. But if I'm buying these dips, I know where I want to get out. So I'll be taking contracts off there, but it's not a level I would ever put on the chart. Tim, really good question. How do you know if it's a pullback or a trend reversal? Well, you don't. You have to use other things in your favor. So, as an example, this dip on SPY to this opening range top, this was a nice one because we had confirmation across the market. Not only do we know we got some support there from the opening range, its opening range also happened to be the high of the opening candle. We can kind of assume that's going to be a relatively strong level. We then had XLF and XLE bouncing. And then we had three of the four big tech names I watch. We had Apple, Amazon, Nvidia all working like sitting on support. So this, technically speaking, like if we draw this was a trend that I had. The trend broke down here, but the trend is still up. The day is still bullish. Just because a trend breaks doesn't mean we flip bearish. And because we know most breakdowns and most breakouts fail, we still look to buy that first breakdown. And so when we have a bunch of things across the market telling us, hey, we could bounce here, that's when you can say to yourself, hey, I think this is a pullback. I don't think this is a reversal. Um, you know, Reversals will be dramatic. Pullbacks typically less dramatic. Is a great way to look at it. Oh yeah, exactly. Exactly right here. Definite seller exhaustion down here. And that's what you see. And that's something that a lot of people have heard me talk about. I use these buy and sell volume indicators up here. I think volume's one of the greatest tools that anybody can find and use, because it tells you who's winning. Like, is the bar selling? Is what's going on, in the last 9 bars? Are we selling or buying? Volume can tell you a lot. And something that I love to look for is I always have the daily time frame. That's what these left two volumes are, and then the right one is the current 5 minute candle. So when I see one of these zero out, like this morning, this we had zero buyers. Like this was, or we had 50,000 or less buyers to a couple few million sellers. When I see that, I start to say exhaustion. And the issue is you never know how big the bounce will be. You will get very likely the exhaustion bounce. But the trend can resume down. So that's why you always want to be a little bit cautious there. But yeah, great eye. I mean, that was a really, really good one as well. Yep, Joe, that's exactly what I do. I chart everything on the higher time frames. And then, I mean, it's not exactly this simple, but keep it as simple as you possibly can and say, hey, if we're at support, I'm looking to buy calls. If we break below support and retest resistance, I can be looking to short it. If we break above resistance, pull back and test it, I can look to be long. Same as up here. All where I was talking about a bunch of people trying to catch this breakout, all very reasonable shorts right here at this level. Sure, if you did this one, ultimately, you got you took the bad one. But it always goes back to, and a statistic again that I try to repeat to people all the time. It's literally why flags and things like that work, but people don't ever think of it that way. Statistically speaking, 80% of breakouts fail. Of course, it all depends on what time frame you're on, how many tests are there, blah, blah, blah. But 80% of breakouts fail. So here's a failed breakout. Here's another failed breakout, another failed breakout, another failed breakout. Well, now I'm not going to be shorting this. This is 4 times that it's attempted it. We haven't really sold. We've held support on the lower side. If I haven't shorted it on these first 4, I'm not trying it on the 5th. This happens to be the perfect example of 80% of breakouts fail. Technically speaking, every single candle of the day is either breaking out, trending, or failing to break out. Every single one. So we got failure, 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 failure. We happen to come right into the 9 EMA. I'm sure people were viewing this as a flag. Like I said, I view it as consolidation. You get consolidation, 4 rejections, a pullback to an EMA. This is an an entry. If you didn't catch either any of these entries on SPY calls, this is the best one. This is the best that you can do without chasing and risking a bad entry. But this consolidation back into a 9 EMA, beautiful one. And use those daily levels and you're set. Yeah, that's something that you should always do, and that's something that I always recommend to people is, we've seen in OT, we have people that are bearish all the time, and unfortunately that is a losing mindset. But what I always try to do is tell people, look at the big picture. A few days ago, my buddy, said last week, super bearish. He says, we're in a downtrend and sends me, well, we didn't have these candles yet, but sends me these and says, we're in a downtrend. And yes, technically speaking, this is a downtrend. We've set lower highs and we've set lower lows. Well, if you start clicking the button and zooming out, we are basically as far removed from a downtrend as you can possibly be. And so that's what I was trying to tell people. Buyers are in control. Buyers have been in control. Is there opportunities to make money short? Absolutely. But the stress-free trade for over 2 years now has been buying the dip. And so, buyers are in control. Buyers have been in control. Buyers remain in control. I'm not saying don't short on days like this. Obviously, that some of us don't. Me and Tilia, but we don't trade puts often. That's for sure. Tilia never does. We're in a bull market, so you look to buy dips. It's the stress-free trade, and you're exactly right. You start looking at that, and 4-hour bulls in control daily. Bulls are in control weekly, monthly, quarterly, yearly. We are. Bulls are 100% fully and completely in control. Very few people will ever look at a yearly candle, but because they're virtually useless. Look at this pullback, push, breakout. Who's winning right now? And who's winning, of course, all time. You can see right here. This is just the ultimate example of why being bearish on the stock market is just stupid. But the bulls are in control. Everybody knows the bulls are in control. That's the way it goes. Okay, let's see what we got. Oh, we got Norvin. Lemonade. What's going on with it? Didn't you put, I think I charted this one for you pretty recently, maybe not. Oh, no, looks like not. Yeah, we got nothing for, oh my God. I love how your charts are always like, can you pull up this thing that's already up, 400%? Okay, Lemonade. What we got here? I remember, I remember, I remember trading this thing back in those IPO days. That was a fun one. Oh, we care about that. We care about that. That's probably IPO day. That's how they did it back in 2020. IPOs ripped and didn't pull back. Let's see. I don't even know what we're trading at. I'm sure we're above it, but I'm sure all Norvin cares about is upside targets. Let's see. And that 55 is apparently just crucial, huh? What's this thing trading at? $50.36. I love how Norvin calls this a textbook breakout when there is just nothing textbook about this thing. Well, here's my levels. This is what I'd be watching. Oh, and then I mean, obviously you got to put 50 on there, because big round numbers. But dip by it down to 49 and look for these moves upside, and obviously that, if it's dipping to 49, it's giving up 50, there's a little bit of risk involved there. But let's see. A little bit of consolidation around that 47 area. Not much though, huh? Yeah, just not much to take note of there. And I guess kind of that. So relatively. I love it though. Well, yep, there you go, Norvin. Those are the levels I'd be watching personally if I was on it. Let's see, what do we got here? Yeah, sushi, the 2020 candle is pretty insane. That 2020 candle is wild. What am I doing my beginner classes? So, honestly, today was supposed to be one, but then like a couple of weeks ago, I tried to have my schedules out, early to the guy Archon when he posts these things. And so today was going to be class number 2, but it's Q&A today. But for the next basically 7 weeks are going to be all the beginner ones. Last year, or I mean, last week was the first one with support and resistance, but then uh, he asked me, do you want to do, we still had a Q&A on the schedule, and he asked me if I wanted to do it. And with what the market has been doing these last couple of weeks, I said yes, because I wanted people to, ask questions about the market and what's going on. And like, I mean, there's no denying that SPY is just, and QQQ and all the big tech names. I mean, obviously crypto names, everything's putting in wild moves. So when those kinds of things are going on, those are always when I try to do my Q&As or my trading psych ones. But starting next week, and then I should say next week's class, I'm going to be on Monday because Thanksgiving is Thursday. And so obviously I'm busy and nobody would come. So next week's class will be on Monday. Do I ever trade the 3 or 2 minute? Absolutely not. They don't give you any information that isn't presented better on a different time frame. For whatever reason, people always want to drop down those time frames to the 1 2 3 minute. They don't help you. I think if most traders, as opposed to going down time frames, went up time frames, go to the 10 minute, go to the 15 minute, go to the 30 minute, you'll start to find more success because you might be looking at something. We'll look at Lemonade, you might be looking at something and you might have the completely wrong idea. If you start looking at these short time frames, like, you start buying these highs, these 1 minute candles, because you have big, strong, bullish candles closing near their highs, sure, it might work until you get absolutely throttled on, or maybe you're like, oh, I'm going to try to buy the dip at 50 because, we're getting a couple bounces on the 1 minute. Well, if you just zoom out to the 5 minute, there's no bounce at 50. There's rejections at 50. And so longer time frames save you heartache. The 1 minute just, and I mean, I got a bunch of friends who try to use it and they all fail. I don't know. And I got one buddy, he's been like, oh my God, he still uses the 1 minute after 3 years of absolutely failing trying to trade it. But people don't, the 1 minute serves most traders absolutely no purpose. If you're a futures trader that trades an extremely large size and is actually scalping a point or 2 points or, ticks, you aren't looking for much, there's a time and a place for it. If you're trying to trade options on the 1 2 3 minute, you're going to fail. Like you're going to get stopped out of trades you shouldn't stop out of, and you're going to enter trades you shouldn't enter for sure. Let's see. Soundhound. Oh, that was mine. That was a that was a sniper for me in MMA. This is where me and MMA first got in, somewhere down here. $2. Like somewhere right back here. Oh, oops, that's the weekly. Let's see. Yeah, somewhere right back here. Somewhere in that $2 range. Might have even been around here. But that was our first entry on Soundhound. It's a good one. I mean, it's a stock I'm actually bullish on. I mean, a company I'm actually bullish on. I think they're doing I mean, they're doing cool things, you know, AI voice recognition, doing cool stuff with uh music production as well. And likely not good for music producers or music production people. But been super tradable. Yeah, I mean, really just dip by those dips all down to 6 if you can get them. And then your stop's obviously going to be 5, you know, something even lower. I mean, 450. But this is something that I'm honestly bullish on it. As I'm looking at it right now, no interest in trading it right here. Almost filled that gap. I mean, basically, what, 3 cents off, basically filled that gap. But look to buy those dips down here on it, you know. 620, 650, anything like that's a pretty nice entry for sure. And a company that I do, you know, remain bullish on. Gabriel, great question. So, you know, what my experience is a little different than a lot of people's. I started with shares for years before options. And then by the time I got to options, I wasn't doing any of this short-term stuff, you know. I started really trading options in the beginning of 2016 because, you know, with the new administration coming in, we knew there was going to be volatility. We knew big business could really thrive. And so it was a time where there was going to be really nice volatility in the market, and that's what options are good for. So when I started, it was all long-term stuff, you know, 3, 4, 5 month out contracts, and just letting them work mostly on the ETFs. Then uh, when I started trading short-term stuff, obviously it was, you know, there was a learning curve to it, but I already had the charting experience from shares. You know, I knew how charts worked. I knew all of that. And so, of course, I had issues learning how do options move, you know, what are the Greeks, how does all of that kind of stuff work? You know, how does all of that stuff work? And so I got smoked sometimes, you know, but I already had the experience. So, I mean, I was trading them pretty heavily, you know, from 2016 to 2020, mostly long-term stuff. When I started going to short-term stuff around, you know, beginning of 2017, I had a little bit of clapping, you know, but then I just learned about how contracts work. And so I was able to trade it, you know, I was able to trade in a pretty friendly market. Of course, you know, there were some tweets that really sent the market either ripping or dumping a few times. But I was able to trade in a market that, you know, I could learn the options a little bit better. I could learn how options worked, you know, and that's where I had to, you know, change my trading strategy from just doing shares before. And, you know, all of a sudden when options, you know, when I started trading options, that was when, as you guys heard, I mean, I started the class with it. I learned entry, stop out, exit. They are everything. And if you don't know them before you enter the trade, then there's nothing, you know, then there's no reason to be in that trade. And so that kind of leads into the second part of your question. How do you feel during the trade? I feel nothing. I mean, I feel absolutely nothing because when I enter a trade, and you guys saw how I was talking about it on SPY, you know, and again, we're hindsight trading, so you got to act like you know what you're doing. But this trade, you know, when I took this trade, I was watching for this trade. I saw the bounce, then I saw the three push wedge. Then I said, man, I stopped out right here, you know. And then I started to say, okay, we're turning around and we're turning around. I want to buy the break of this trend with some sort of retest. You know, that's what I'm personally looking for. And so that's and I actually had it drawn. I think I even had it drawn like that, but I think I moved it to here. I was watching something like this. I don't remember exactly where the trend was, whatever it was. I know we broke above it and then the candle wicked down. So I knew here's my entry. Here's my stop out. My first target is here. My second target is up here. I know all of that from right here. So I get to sit there for 15 minutes and I watch it rip and people say SPY calls and I say, oh, well, I wouldn't buy them. And then they say, you're wrong, River. And then they say SPY calls and I say, yeah, if we break this trend on a pullback. So I missed this candle, but I my plan, my trade is planned. You know, I know I'm buying 591 SPY calls. I know about how much they're going to cost me here because I use limit orders to figure out where that will be on the chart. I know that if I get stopped down here, because I'm watching it here, so I see these contracts are $80 or whatever, and then they're up here, and I say, okay, well, they're going to be $100, and my stop out's going to be below 80. So I know my entry, I know my stop out, and I know my potential profit all before I enter the trade. So when I'm in a trade, I feel nothing Don't get me wrong, you guys might hear me like, when we're in today and I'll be like, dump this fucking thing, or sorry, pardon my language, dump this thing. Whatever I say, but it's not like I'm like, I don't like actually care. I'm just like, you know what the trade can or cannot do. So you either make or lose money. There's only two options. And anything that happens between your stop out and your take profit is noise. None of it matters whatsoever. So that's how I trade. I know my entry. I know about where I'm targeting. Obviously, not going to put the level on the chart, but if I get this big breakout candle up to some of these wicks, I'm trimming. Then my stop moves up. So now I'm not losing money. Then we get another nice push up to some of these wicks. I'm likely out of the trade, or my stop at the very least moves up to the low of that candle. How does MMA find those? Norman, I found it. I found sound. Well, my buddy found sound. My buddy found A Lab too. My buddy found UTCC. Oh yeah, sushi. The B bands on the longer time frames are absolutely amazing. Uh, they're like one of the most powerful tools. But my favorite one, and I'll show you guys just because I actually have an example of it because it's a trade that we took. So if any, and I've done a class on these kinds of things. So B bands, and I sometimes I'll run the 2.5, so it's one right in the middle. But generally on these shorter time frames, I have a little chart up in the top right corner of my screen that I always have the B bands pulled up. So we got the second, two standard deviations, three standard deviations from that 20 SMA. Well, we know that a candle closing and staying outside of this there's, I believe, I don't know, ballpark 99.5% chance it doesn't stay there. So this is my favorite trade you can possibly find off of the open is that overextension. And so that's what we did. I think you were in there in voice chat these days. I will use it on something like this where we are so overextended. I'm gonna short this. The premiums on puts are smoked after a big green candle like this. And my stop is right overhead. Again, it was that 230 basically right overhead, as well as just the top of this candle. So we take the short here. We aren't looking for a dramatic move. In fact, my target was here because the market will likely reset when you get these overextensions on the B bands. You don't know it's going to turn around and dump like this. Frequently, you push out, pull back, and resume trend to the upside. But this just happened to be one where it got absolutely smoked into the close. Another way that I use it scalping, something like this, and obviously hard on Apple that those contracts they move great when Apple's moving, but if you're like double bottoming things like that in tight B bands, you can find nice little scalps here. And then one of my other favorite ones is they do an unbelievable job at, oh God, I wish I would have seen this today too. God, there was just so many reasons to be long. So in Bollinger, I read Bollinger's book, the guy who made Bollinger Bands. So he talks about, W bottoms, M tops. Those are the kinds of things he talks about. It's a double bottom. And you guys all know that's basically the only pattern I trade. And I love them because, they're volatile and they're quick and they have I mean, I don't know, 80% success rate, 70% success rate, at least to make a little bit of money. And how Bollinger uses them, he says, you want to see an extension down outside of the bands. Then you want to see a bounce and you want to see another pullback that does not go into the bands. And that can, that's one of his ways to identify a double top or a double bottom is you get the volatile first bottom, the less volatile second bottom, and you buy it. And then obviously stops are under lows. And that's why that's why I love double tops and double bottoms. Risk is tiny. If you can trade them, a lot of people can't trade them because they don't like to pull the trigger when they need to pull the trigger, and they typically move very quickly. But those are the main ways that I use them. And there is times, oh, I saw one today. There is times where you get obliterated. So Google, I mean, this thing blasted outside of the band, closed, did not give you enough bounce to make money. This next candle would have stopped you out, and it would have been a big stop out because you don't quite realize it, but that's like a $2 candle. But this is an example of, hey, it doesn't always work. We had a candle close outside of the second band. We had another candle close outside of the second band. This one didn't quite close it, or third band rather. This one didn't quite close outside of it, but it was pretty dang close with no sign of a bounce. So it's not this foolproof method that you're never going to lose on. There are times where you can get blown out. Bounces on swing trades. Love that question. You buy dips. That's what so so this is one XLE. It God, bands are just so hideous, you know what I'm saying? Um, so XLE spent, the better part of a year in a pretty dang tight range. And so we can basically go here and we can basically go, I don't know, probably somewhere down around here. We'll call this our XLE range. I probably have it still on another chart, maybe somewhere. No, look, sushi short. I must have been making fun of sushi on that one. Yeah, I guess I don't have one, John. Oh, there we go. So here's my old XLE range that I had. People were hammering XLE at 92, trying to catch this breakout over and over again, getting blown out. Anybody buying these dips down here? I mean, sure, here's a loss. Anybody buying these dips, and there's another loss, but you make money, you make money. This one blows you out. That's unfortunate. But you make money here, you make money here, you get blown out again. You can make a little bit of money, you can make a little bit of money, and ultimately you can make a lot of money on that one. So you can get blown out, a few times here and there, but you buy the dip, especially in a range. You want to be long at the bottom of ranges. You don't want to be like long at the top of ranges. This is where you want to be short because we see most breakouts fail. That's how you trade it. So on swing trades, for me, I'm never the guy like big green day. I ain't swinging long. That's not how I trade. You'll get blown out over and over and over again. Big green days are typically not the best days to swing long on. Let the market pull back a little the next day and get long if you're still bullish on it. But if you're swing trading, you don't want to be buying up here at these highs looking for the breakout. Can you make a couple bucks every once in a while? Sure. But you can also be rejected and rejected and rejected and rejected just over and over and over. Maybe you finally get one, and then maybe you finally make a couple bucks. But if you start looking at this and say, I'm going to short this, you make money. You get blown out here, I'm going to short this, you make money. Maybe this one, you make money in one day. If you try it again, you get blown out. You short below here, you print. You push up to here, short it, short it. Like that's what I always try to teach people. You want to be short at highs, especially in ranging markets, like XLE was. But you don't want to be the person buying calls on a big green day. Does it work sometimes? Yeah, but you can more often than not get a nice little pullback to enter on the next morning, not fight theta and not need a gap up just to, be break even. Exactly. You should never feel a risk, if you should never feel anything if you know what the risk is. Norvin, you're sending a lot of messages. SoFi, yeah, let's check it out. I was actually charting it today. I know Toasty's in there. Um, what the fuck, dude? I was charting this thing today. Man, we almost got our pump and dump portion on it. We were so close to those lows again. Wow. Wow. Um, that was such a good one. Well, I was just trying this today. I don't really know. Oh, it might be on my, oh yeah, it's because I'm on the wrong account. Um, so SoFi, mooning, obviously. I have to be blind to not see it. So when we start looking for levels, we come back here and we start looking for any of these, again, big rejection points, anywhere maybe we see a pretty massive double top, anywhere we bounced and rejected back. These are the things we're interested in. Any of these lows where we take a big bounce, these are the levels that we are interested in. Obviously, this big consolidation right here. Then we go back to where we're trading, which is obviously just ripping. And these are the levels that we have to trade. Obviously, I'm not, big rejection out that 15.5 level. I'm a dip buyer down here to 1450, stops below it, but nothing to be bearish about on SoFi right now. So not a trade I'm going to jump in front of short or anything like that. Obviously there was a nice short opportunity today, but who knew? But really trade these levels, we're all the way back to those 2021 levels or whatever it is. So be careful. Well, yeah, Norvin, you asked me about A-Lab at 60 when me and MMA entered it at 40. And Norvin chat's way too much. But yeah, A-Lab was a sick one. Look at this. This is where right around here is where I brought it up to MMA. Man, it's unfortunate I'm on the wrong account. Right around here is where I brought it up to MMA. We bought this dip to 40 down here, somewhere down here. Then I sold this and I never got back in. It was unfortunate. My buddy hammered this one though. That's my genius buddy. He was the one who got me on it as well. Okay. So nice. Wow. Awesome questions tonight. Thank you so much, everybody. We still got 5-10 minutes. If you guys want to keep looking at charts, any more questions, let's talk about them. Hopefully everybody learned a little bit of something tonight. If not, hit my DMs. Let's keep talking, let's kind of get you on the right side of trading. This was an awesome QA though. ETR. Okay. Marvin, what do you got here? Classic. There's Norvin. Let me tell you about this stock when it's already run from 90 to 160. I mean, I don't know what you want from me here. Not much. Wow, look at that. That thing just ranged for 4 years. What a breakout. I mean, not a lot in the way of levels here. Obviously, you want to be aware of these gaps. These aren't like, long-term levels. Or I mean, they're daily time frame levels, but I mean, break above this 152, it likely pushes up to these highs, Norvin. I don't know, or 153, whatever it is. Obviously, you don't want to be long there. As it stands now, it's a double top. So you don't want to be the one buying calls here. Wait till we get the break and retest there. Or pull back to this 146. Again, I know nothing about this stock, so who knows? What's a prime long position? Really good question, AJ. Wow, I actually like that. I mean, if I had to get long on something right now, there's a very good chance it would be in either the financial sector or small caps somewhere. I think always nibbling your big tech names, your Microsofts, Apples, Amazons, all of those are worth an ad, always. But if you're looking for a bit more growth, I mean, go look at some of those pay as you goes. I mean, Affirm, I hate to chase it after such a big move, but like the thing wants to go. UPST, another one. Look at that. That's a big level. UPST, another one. I think it wants to go sooner than, I mean, not to say that a run from 20 to 8, 300% run is bad, but these are kind of things I would have eyes on. And then the final one I might be watching would honestly be IWM. I'm definitely bullish on it into year end. I don't see any reason for us to not go touch this 242 at some time. I'm obviously not going to chase it here. That big breakout came, at least in my opinion, came a few days ago. Obviously, this was the breakout yesterday, So, but small caps, financials, that's definitely where I would be looking. And then if you're a short trader, then I'd personally probably be looking at some of those oil names short if it was me. Not that I think they're going to crater tomorrow, but I do think they have a little bit to deal with in the next little while. What's the next stock my buddy's in? He's on solar now, but he's already up so disgusting. It was like I don't know, last week or whatever before Trump, took back some of his solar talks. My buddy was at an ENPH down here. I think this is the other one. This is the other one he's on. He's heavy in this thing around like 10-30, I think he told me. He's big in that UCTT, but his entries uh off the top of my head 32 or something. So he's up nice already. But he's got a bunch. Oh, thank you, Christina. I appreciate it. So wait, Robinhood I know Robinhood was adding SPX. Is it actually on there? That's horrible news. I mean, all I can say, I'm not even going to talk about it. Don't trade SPX. That's my advice for you. You will blow your port. For sure. Like you will absolutely blow your port, especially if you're trying to trade SPX on uh Robinhood. It'll blow up real fast. Oh, but I'm looking. They don't have SPX, the one he trades still. So that's good. HD. Yeah, what's Home Depot up to? Wanting more? Looking like it's wanting more, huh? This is a nice little consolidation here. Again, I don't trade flags. I just think of it as a consolidation, but yeah, you should probably be a dip buyer down here around 400 if it presents itself again. Um, obviously more major trend. Fresh, only got one touch on it. Give it a second. Oh, we're good. Let's see, maybe we had that previous high back here somewhere. See, that's a pretty big breakout point. It's marking the highs and the lows for me. I mean, I did buy it down to 400, looking for the move back to the trend, really even all the way down to 396. I would feel pretty comfortable. It is scary to see things give up whole numbers, but I'd still feel comfortable down there. Looking for the move back up to the trend. You know, we as traders, we want to buy the pullback, look for the move to the trend, trim our positions, have runners or whatever. So if the breakout comes, we're involved. You know, that's the best way that we can trade something like this, at least in my opinion. Tim, yeah, good, good answer there. Or good question there. I don't know why I sent it as a direct message. I bet other people feel. So the 15 minutes different. You know, you can pull up your 15-minute to have ideas of where important levels are. But if you're scalping, day trading, you can time those entries really nice on the 5 minute. And then if it's a day trade, not a scalp, but always if you're scalping, if you enter on the 5 minute, you need to manage the trade on the 5 minute. If you're looking for just a nice entry, that 5 minute can give you the really good entry for a day trade, and then manage it on the 15 minutes. Say, hey, 15-minute candle close under a level or whatever it might be will be your stop out. But I do know what you're saying, that it can be weird to go to a longer time frame. How big should your part be before considering selling options? I mean, it all depends. If you are getting into STO, one, you need to understand that there can be absolutely gigantic risk involved. And the other thing is you need to not, you can't be greedy. When you're selling calls or maybe you want to own a position and so you're selling puts or whatever it is, you aren't looking for huge gains. You're looking for nice little consistent reward gains. As far as how big should your part be, I mean, I have friends that have traded STO very, very effectively with 5,000-6,000 bucks, but if you're trying to put on risk and maybe make a little bit more money, you need a big position just to cover the that margin and all of that to have enough money to, like, if you're selling calls or something like that, you need to have a big enough port to back up those calls if it happens to come for you. You got to have all those port shares in your port. Or if you're selling puts, then you either need to be ready to buy that contract back, or be ready to be assigned 100 shares. Well, AJ, let's wait for a little bit more dip before we go diving into that. But if you don't want to go direct, exposure to a name, XLF, that's the financial sector. And I have an extremely, man, I didn't realize that it had ripped 50 today. We talked about that last week, but I wanted over 50. Uh, if you want longer term exposure to XLF, you can get some 6 month out contracts right at the money that will end up paying you. I mean, again, don't buy them right at 50, but if we get a dip down here, 49 or something, look to be a dip buyer there. Right on, SK. Thank you. This Santa rally, I love you, AJ. I wouldn't just be diving in on UPST right now. If we can get this break and hold above 72.76, you can get a nice move up for that gap fill. And then potentially push those highs. No guarantees, of course, but I would want to break and retest here, or I would want to see us dip back down to kind of these lows, 65 or something like that. And then for me, a couple months time, right at the money. That's always going to be the best thing you can do with a really, really tight stop. Look at Gap. Like Gap, like the clothing store. Wow. Well, oh, earnings today, huh? Before the bell or something? Oh no, earnings this evening. Huh? After a big old day. How funny. Just a ripper 6% day to then put up a what, 20 some odd percent move after hours? I mean, I don't know what to say. Apparently those numbers were good. 16% move after hours. Wow. And so it's going to be, where is it at? 25. It's somewhere up here. Well, I mean, they basically just pushed it to these highs. I mean, if it stays above 25, we can look for it to go back to some of these highs up here. Like, as you can see, is not a big mover. Spends a lot of time sideways. So, but we're obviously not going to dip back down to here. So we have to talk, the market is actually, just for a better view, the market is actually up here now. So now we have to, look at these and say, okay, we are dip buyers down to about 25, or we're dip buyers on breaks and retests at 25.43 or so. Looking for really 26, 26.30, 27.30, something like that. Yeah, huh? Okay, Norbin, last one. LEU, huh? Centris. Well, now you're talking, Norbin. Put in the Ripper, but it's had a real nice pullback, tempting the breakout. Big pullback off highs. I wonder what these people do, though. I can only talk technically about these. I can't talk any fundamental stuff. I don't know what these companies do that you're always checking at me. What are we doing with Rambus, dude? Thing's dead since you alerted it. Really, I assume this breakout fails. That's always what I assume. But I would love to see a breakout retest and pull us back down here somewhere to this 22 area or 72 area, looking to get long, stops below really 70 or so. So you're going to have about $2 of risk on the trade. But then you would really be looking for that move back up. You can get down to 73. You'll be looking for the move back to 79. So, I mean, you're going to put what, $2-3 of risk on the trade for a $6 move upside? Not a bad one, Norvin. I don't hate it. Man, this was actually, but here a few days ago was obviously like probably the really good entry. I guess it never even pulled all the way to it, so that would have been a tough one for me. I would have expected it to hit that 60. But yeah, nice one. You even could have bought this right at 70, on the close of 70 and then stops again under, kind of a daily close under there, under these highs. I actually like that one, Norvin. Thanks. Okay, well, that is going to do it. Thank you so much, everybody. I really appreciate you for being here. This was an awesome Q&A. Many, many questions. That's exactly what we wanted from them. Hopefully we were able to get to everybody. So you got a couple more things. Thank you all so much. Nah, JR, anybody can do it. This is trading's easy. We make it hard. Anybody can do what I do for sure. I just keep it simple. But thank you all. I really, really appreciate it. Awesome turnout tonight. Thank you all so much. And we will catch you tomorrow. And if you're in pro, I'll be in that VC in the morning. I only got about an hour to trade tomorrow morning, but we'll be there. Everybody, have a great rest of your night. Thank you. Yeah, AJ, thanks for showing up, man. I appreciate that. Good to see you around again. Okay, we'll catch y'all later. Thank you, everybody.